guys, my name is Mike Munzing with Munzing Mortgage Group. Heading into the end of the summer, Labor Day weekend, a nice 3-day weekend coming at you. If you're going to be in town holding an open house, I will be working. I was out last weekend, it was fantastic. There were open houses, they're seeing 40, 50 couples coming through. It was fantastic. If you don't have listings to hold open, talk around your office, find a listing to hold open, get some buyers, give me a call. Let's work with them, let's get them ready to buy. This market is heating up. The listings are increasing. It's awesome, it's fantastic. Go to my website at www.mikemunzing.com. Print up the rate sheet so you know where the rates are. They've dropped just slightly this week with all that talk of Syria. I think some of the foreign issues are starting to pull the rates down a bit. I don't know how long they're going to hold, but let's get that printed, take it to your open house. Once again, give me a call anytime and we can get those buyers ready to go. Now that being said, I do want to bring up this week the whole issue of the QRM and the QM, quality mortgages and quality residential mortgages that are coming up in the first of the year. To bring that message to you, it's tough to beat Brian and Frank, my friends up north who do these great videos. Watch this video and I'll follow up right after.
To understand today's show, we need to understand what the difference between a QM loan, which is a qualified mortgage, and a QRM loan is, which is a qualified residential mortgage. And though the show has a lending slant, it should be important to everybody that's in the real estate industry because it affects you. Also, realtors out there, you'll soon be able to have a conversation about a central issue to lending that your lender quite honestly doesn't know anything about. With that said, here we go. A QM loan was mandated by the Frank-Dodd Bill and initiated by the CFPB. Now, a QM loan will need to meet safe harbor, which means there's not going to be any negative amortization loans, nothing over a 30-year term, points and fees not to exceed 3%, and income and assets and employment must be determined by the lender and go above and beyond what their automated findings determine. Now, this is important to all of you in real estate because going forward, if your loan does not meet the QM or qualified mortgage standards, the loan could be subject to litigation from the borrower for predatory behavior. Fannie and Freddie, and pretty much all the other big players in the game, are only going to deal with qualified mortgages that meet safe harbor. Really, a qualified mortgage deals with the borrower and the origination of that loan, not so much in the secondary market. Okay, you got it? Now, a QRM loan, or a qualified residential mortgage, was designed or endorsed separately but all together from Dodd-Frank by the Federal Deposit Insurance Corporation, the Federal Reserve, and the Office of the Comptroller of the Currency, the Federal Housing Finance Agency, the Department of Housing and Urban Development, and the Securities and Exchange Commission. I mean, talk about too many chefs in the kitchen here.
I have no idea, but look at these signs. He's already, he's okay.
Now, a qualified residential mortgage, or a QRM, is a mortgage that's really designed to be sold in the secondary market. See? Lenders prefer to sell mortgages quickly to replenish their funds so they can continue to make loans into their community. And the vast majority of mortgages out there, they get sold into the secondary market. Well, if that makes no sense to you, you're not alone. So, if you want a term to understand a QRM loan as opposed to a QM loan, a QRM loan deals with a lender's skin in the game. What that means is how much of a lender's lending do they need to hold on to, rather than selling off in the secondary market. See, lenders want to sell off their loans so that they can keep their funding lines open so they can keep on lending. Now, once their lines are extinguished, they're done lending. So, selling loans replenishes their lines. It's the goal with most regional lenders with their lines of credit, and this is what a QRM loan deals with. Now, if this sounds like there's overlapping regulations, then welcome to the mortgage industry, because this is what we do. It's like if your mom says, if you ride that skateboard today, then you're gonna get the belt. So you ride the bike, right? But then your dad says, if you ride that bike, you're gonna get the belt. So where does that leave you? You don't ride the bike, and you don't ride the skateboard. So you default
default to the safest course of action, which is to mind both of your parents.
So that's what lenders are dealing with. Is it the bike or is it the skateboard? Or in our case, it's the QM loans or the QRM loans. What we're going to do is default to the safest course of action. QM loans say that safe harbor, less than 3% in fees and costs, no neg am, no 40-year loans, and verified income and assets on your own. And you got to make sure your DTI ratios are below 43% or you're going to get the belt. Now, what does QRM have to say about this? Here's the kicker, guys. QRM right now says, well, they say the same thing right now. But the latest conversation is that a lender of loans might have to do loans with 20 to 30% down to meet the QRM guidelines before that loan is safe for them to move off their books.
Into the secondary market where they all want to send them, or they'll have to hold an unspecified number of loans on their books that are under the 20 to 30% QRM threshold. Now, that's a big down payment, and according to Thomas Howard of the National Association of Realtors, it would take the average American 25 years to accumulate it.
So lenders are going to take the safest course of action, and between a QM loan and a QRM loan right now, as stated by Fannie Mae a couple of days ago, that seems to be 95% LTV. But it might change with QRM.
So, nobody wants the belt, right? So lenders, they're going to meet QM and QRM loan requirements together because that's the safest road.
Talk about a chokehold on the gobbler of the real estate industry right now. I'm telling you all right now, and you need to listen to this. If I'm reading this whole thing right, this means it would end up being a loan going forward. It's going to require a 20 to 30% down payment, and it's also going to have to meet the QM loan requirements of safe harbor. Have fun with this one.
All I'm saying is that sounds great for like 9 people in the country, but for the rest of us, man, we're going to be on the outside looking in.
I know this was a difficult show, but it's very important because this is what we're looking at right now. So the point is this. QRM loans need, emphatically, to come in line with the guidelines set forth by the CFPB as mandated by the Dodd-Frank Act, period. And anything else is going to be problematic, big time, for everybody in real estate, my friends, as a whole. Here's the point. Here's what lenders want. We need to have a unified voice that is simplified and streamlined, and lenders will follow that thing and they will fund loans. Right now, too many chefs in the kitchen.
That's right. And let's be honest, come January, qualified mortgage comes out. That's definitely going to put a strangle on lending. Throw QRM a couple months down the road past that, it's going to make it even worse. The people in Washington need to get their act together. So make your voice heard and let them know.
As Brian and Frank make the point brilliantly, the government is confused. They don't know what they're doing. They're implementing new laws, new plans, new restrictions, and they don't even know what they are doing, as I said. So we'll keep a close eye on this. It's going to be rocky first part of the next year. Let's hope that somebody wakes up and realizes that they're contradicting in so many different areas, and it's going to make it very tough for our buyers. So I will be watching that. I will be trying to bring good information to you so we know what's going on. Let's sell some homes at the end of the year. Let's get some transactions closed. I'm really looking forward to working with you and your buyers. That would be great. Have them give me a call at 949-689-5626. Go over to my website, have them take a look at the online application. It's quick, it's easy, it's simple. I pull their credit, get them approved quickly, so you will be driving around with borrowers that are qualified, approved, and ready to go. It'll be great. Hey, enjoy this weekend. It will be fantastic. Get out there, hold an open house. Let's get some of these buyers. I'm here for you. I'm here for your buyers. Hey, God bless you. God bless your family. God bless this beautiful country we live in. It is gorgeous this weekend, and we'll talk soon. Bye-bye.
Money, 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 money.